Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about an interesting company. We're talking about Procter and Gamble. So let's go ahead and begin in with today's daily stock analysis. Thanks for joining us. And if you haven't subscribed, go over and hit the subscribe button because I bring you great information every day. And every once in a while, we get a bonus, which is put in there too. But today we're talking about a good company, Procter and Gamble. And one of the reasons why that I wanted to pick Procter and Gamble to talk about is the fact that they do pay dividends. There's a couple of other characteristics that go along with this particular company, but I think the more that you know about it, the better that you'll be able to feel about making decisions on whether this should be a stock that should be in your portfolio, depending on how you're going to use this particular type of stock. Now, when we're talking about Procter and Gamble, the biggest reason that I picked them to talk about today is that I put together a portfolio for clients of dividends. And that's what I've been doing with some of my individual clients in the morning. We've been working on stocks that have dividends, and this is a great one to start with. And I want to talk to you about this stock in itself, some of the characteristics of it, and why it is going the direction that it's going, and some of the reasons why that it won't be. And then we want to also talk about some of the characteristics that make dividend stocks good. So let's go ahead and talk about that just a little bit further today. And as we do that, as I begin into this, I want to remind you, as I mentioned, that I do work as a financial planner. And if you want to learn more about what I do for people, go over to my financial planning website, which is richardsfinancialplanning.com, and you'll learn about the prosperous planning process. That's a mouthful. All right, as we go into this today, I put up here a spaghetti graph. I don't like graphs a whole lot. I'm not a real technical guy when it comes to doing analysis. Remember, fundamental analysis looks at the internal workings of the company, and technical analysis kind of looks at the history and some of the graphs and charts. Now, one of the reasons why that I put this particular chart up here is to emphasize the importance of dividends with a company. This is a chart of the S&P 500. Now, it's not up to 2020, but I think that the emphasis or the point that I'm going to make to you is made very well here. If you look at the blue line represents all the dividends of the stocks within the S&P 500 being reinvested. If you look at the red line, that's just the value of the individual stocks. So my point is this. My point is that for the growth to be as good as it can be, it needs to have the dividends reinvested. And that brings me to the point of today. There are two types of investors when it comes to dividends. One is going to be the person that invests in a company for dividends for growth. And that would be the person that's going to want to have the blue line. You're looking to get the end result at the end of the rainbow, at the end of the time when you're going to be using the investments that you have. The second type of person that's going to be investing in dividend stocks is going to be the one that's looking for income and growth. Now, that's really important because if you invest in bonds, the bonds are different. They have different guarantees. As a matter of fact, stocks have no guarantees, as we all know. But when you invest in a bond, you really don't have any growth of the value. You just have dividends in itself. Yes, interest rates does affect valuation and stuff like that. But the point is going to be, if you're investing in a stock, you are emphasizing the growth of it too. So that's one of the things that you want to be able to keep in mind as you're looking for different types of dividend stocks. The other thing I want you to do is I want you to keep this in mind as you look for dividend stocks. When you're looking for dividend stocks, keep in mind that you want to find a wide moat. Now, there's 5 traits of a wide moat. Number 1 is the network effect. Number 2 is going to be proprietary assets. Number 3 is going to be the cost advantage of the company. And then number 4 is going to be the switching cost. Number 5, last but not least, is going to be the size advantage of the company. Now, in last thing to say about this point is this. Moat traits tend to support the ability to pay dividends. If you have the more moat trends that you have of the 5 that I just mentioned, the better ability that a company has to continue to pay their dividends. However, keep this in mind. No matter what it is, it's still a stock, and moat trends don't guarantee dividends. Good example is going to be Disney. Disney's a pretty good stock, but they suspended their dividends temporarily because of the pandemic and what it was doing to their business. Now, at some point in time, that'll be reinstituted, but sometimes dividends change, and sometimes, hopefully, they go up. Sometimes they don't. So let's keep going on, though, and really get into talking just a little bit more about Procter and Gamble and looking at this particular stock and what makes this a good dividend stock. Really, they have several lines of consumer products. They had $19.3 billion in earnings in the first quarter. They gave back $4 billion of that in the past year to their shareholders. We're going to break that down just a little bit more later on. The valuation of the stock itself, it closed today at $136.51. I have here $136.12. That was about noontime. So it's up just a little bit. The valuation of the whole company, keep this in mind because we're going to talk about size advantage here in a few moments. The whole company is worth about $336 billion, which is going to be a big point when we talk about the company going forward. Remember, when we're talking about any stock, whether it's going to be an aggressive one like the one we talked about yesterday with QuantumScape, or we're talking about a more conservative investment like Procter and Gamble, we're still looking for 3 things. We're looking for stability, earnings, and competitiveness. Now, one of the big things that you're looking for in a dividend stock, a company that pays dividends, is going to be that it has a wide moat. And there are a couple of good characteristics with Procter and Gamble along the moat idea. Remember that moat's that invisible barrier, that advantage that the company has over top of its competitors. Now, one of the biggest things that Procter and Gamble has going for it is the fact that it has so many brands. They have 65 name brands. I'm sure you've used some of them today or this week, but they have 65 name brands, which is actually down from what it was. They took a strategic move and they went from about 100 down to 65. So the proprietary assets is one of the most important moat characteristics. Now, another important moat characteristic is that their market share advantage. They have a significant footprint in many different important parts of our economy. 25% of the baby care products, 60% of blades and razors, 25% of feminine protection, 25% of fabric care. Those are big advantages. And then the third wide moat advantage that Procter & Gamble has going for it is going to be the cost advantage. Now, the cost advantage has 2 aspects that I look at. Number one is they are so big that they're able to lower their cost per unit so that they have a better possibility of making profits. And we're going to talk about the competition a little bit, but if you look at the screen, you could actually see that Procter & Gamble is 4.5 times larger than Colgate-Palmolive. They're 7 times larger than Kimberly-Clark, and they're almost twice as large as L'Oreal. Now, the other cost advantage to keep in mind is this. They are able to take a good amount of profit and plow it back into growth of the company. They put 3% of sales into research and development. That's about $2 billion. So they're just not sitting on their laurels and saying, hey, Tide is a good product. We don't need anything else. And they have been very selective about which products that they do introduce, those that they think are going to work the best for the company's advantage. They're just not throwing spaghetti against the wall to see what sticks. The other thing is they are still emphasizing products. They're still putting out information about products. You probably throughout the pandemic have thought, why do you need to do any type of advertising? Because everybody needs cleaners. Why do that? Well, there's competition out there, and they've plowed back in 11% of sales to marketing. That's about $7 billion. Now, when we look at the actual net sales in The first quarter, now you might be asking yourself, what do you mean the first quarter 2021? It's still 2020, at least for a few more days. You have to understand that Procter and Gamble actually goes on a fiscal year, and actually right now they have just finished their first quarter of 2021 in physical sales. So they had $19.3 billion in net sales in the first quarter of 2021. That's their physical year. And that's actually up 9% year over year. Now, when we dig in just a little bit further, this is a big advantage, which is going forward. You have seen this grow because of the pandemic, but even before the pandemic, Procter and Gamble was doing pretty well. They actually, with this past quarter, they finished up 19, not 19, mark that off, 9 consecutive quarters of mid-single digit growth. As I mentioned earlier in the short video, they returned $4 billion to cash holders, and they did that in 2 different ways. Let's break it down just a little bit. One is they had share buybacks, which it's an advantage to the current shareholders, because obviously if they're not paying dividends out to shares that no one's holding, then that saves the company money. So they had a $2 billion share buyback, and then they had $2 billion in dividends that they actually paid out to their shareholders. Their forward dividend is 2.3%. Now you got to remember, through all these things that I'm talking about, this is the past. The past performance is not going to be a guarantee of what's going on in the future. Let's take a look at the actual value, what's happened in this stock over the past year. And actually, in a time when some stocks didn't do very well during the pandemic, actually Procter and Gamble has done pretty well. It's not Tesla great, but it's still pretty good. If you go back a year ago and you look at the value of that stock, it was $121.66. And today, I wrote down here it was $136.57. It actually ended today at $136.51, which is pretty close. That's about a 12.26% increase in that point in time. Earnings has been really good. I mentioned to you just a minute ago that earnings, we've had 9 consecutive earnings of organic revenue growth, and that's really good. Now, when we look at what some of the analysts are saying they're out there, the fact that Procter and Gamble is focusing on fewer products makes it better. They've gone from really 100 name brands to 65. And that's a big advantage. They put a lot more money into research and development, and they're continuing to do marketing. Their sales in emerging markets is also growing very well. Now, analysts that look at this from a bearish standpoint, those who might be standing off just a little bit and saying, well, not everything is a bed of roses. You have to look at it from the standpoint that the growth from the pandemic is not going to continue forever. Let's hope the pandemic doesn't continue forever. As people go back to work and they're getting out of their homes more, hopefully that's going to happen. But the growth that came from the company because of the pandemic is going to decrease. Secondly, personal care products during the pandemic is actually lower. Hey, how many of you have just a Zoom shirt out there, for that Zoom meeting, and you run around the house in pajamas or sweats for a lot during the day when you're staying home, even if you're working at home? So personal care products, it showed up in that sales number. Personal care products, I believe, is off about 9% for Procter and Gamble. Clean up, folks. Currency volatility also hurts profits in itself. So if we have a strong dollar, that's not exactly good sometimes for foreign sales. All right, now when we look at what happens when we look at what the fair market value is, in other words, is this a good time to buy Procter and Gamble? Well, let's look and see what some of these analysts are saying. One of the ones that I turn to regularly is Morningstar. Morningstar gives this a star rating of a 2. Remember, the star rating is primarily going to be based on valuation. The current value, I put here 136.12. Of course, it was 136.51 today, but The fair value that Morningstar has pegged for Procter and Gamble is $113. So it's selling right now, in their opinion, at about a 20% premium. When you look at it from the standpoint of what other analysts are saying, most analysts saying 10 out of 12 of them are saying this. 10 out of 12 analysts are saying that this is a strong buy, even though that it's a little bit overpriced. Now let's look at how Procter and Gamble compares to its competition. I touched upon this in the very beginning just a little bit when we talked about the size advantage. But when we look at Procter and Gamble right now paying a 2.3% dividend, you'll see this is the past 3 years, the spaghetti graph that's in front of you. And you'll see that Procter and Gamble has actually done extremely well. The company that's come the closest to it is going to be L'Oreal. L'Oreal has overtaken Procter & Gamble here just in the last quarter or so, but if you look over the past 3 years, Procter & Gamble has excelled beyond that, but L'Oreal pays a lower dividend of 1.28%. Kimberly-Clark also is a competitor of Procter & Gamble, which is paying a little bit higher dividend at 3.12%, but you'll see it on the graph, the spaghetti graph in green. And I want you to keep this in mind too, that Kimberly-Clark is not a wide moat company. It's more of a narrow moat company. And that's a subject to talk about on another day. And then the last one is going to be Colgate-Palmolive, which is paying a 2.07% dividend, but it has not fared as well over the past 3 years as far as its value goes. And of course, we have to end this part by always saying that the past performance is not going to be a guarantee of future results. Now, as we come to the end of today, what I want to do is I want to go and look specifically at what some of the different analysts are saying. Now, what you're seeing in front of you right now is the most recent information of the analysts that are issuing opinions on Procter & Gamble. And I'd say the most pessimistic one, maybe, I don't know if pessimistic is a good word or not, but SunTrust Banks is putting a target price on this between 115 and 120. Remember, today it closed at about 136.51. The most optimistic number out there is by Smith Barney Citigroup, and they're saying that their target price is between 159 and 165. Now, if you're thinking of buying this stock and you're going to take Smith Barney Citigroup's opinion, then you're going to hope that that's going to be the right number, because they're doing actually pretty good. That would go from 136 to about 159, and that would be a good increase. If you take the SunTrust opinion, if you owned it at 136, you're looking at a price between 115 and 120. So just keep all this in mind when you're looking at it. There's no guarantees on it, but you analyze a stock in 3 different ways. This is the recipe that I encourage you all to take. Look at the stability, the earnings, and the competitiveness of a company. And if you can find a company that has all of these different characteristics, then you've got a pretty good investment. And I really think that Procter & Gamble has all 3 of these characteristics. Is it going to be volatile from time to time? Of course it is. It's a stock. There's no guarantee that goes along with it. But if we're looking for a stock to put inside of a portfolio to use for dividends, this company has a very good history of dividends. It's very strong. It's a leader of companies in consumer products. It's very competitive. It pays pretty good earnings, and it has a very stable outlook going toward the future. Folks, I hope that you've enjoyed the information that you've gotten from me today. And I thank all of you for watching, and I thank you also for all your comments on Facebook and on Twitter and on YouTube. I don't get a chance to read those that are on Facebook and Twitter that much. So if you have comments, go over to YouTube and subscribe there and leave your comments, because the community is much more active there. If you have a stock that you would like me to take a look at, I can't promise that I'll be able to do it all the time, but put it in and I'll see if I can't enter it in. There's going to be stocks that are like Procter & Gamble that I've picked for a reason. And today I picked this one to talk about because of its dividend characteristics. And I hope that you've learned something from this today. I hope you have some great plans for this weekend and you stay safe too and stay well. So have a great weekend, and I will talk to you next week.